Hello, everyone. Welcome to the Index podcast, where we come together every couple of weeks to discuss on-chain data, chart crimes, and metrics that move the crypto industry. Today, I have with me Denning, on-chain sleuth at Pantera Capital.
Hi, everyone.
Julian, Moonshiesty from Blink.
Hi, guys.
And I am Boxer, and I am the community powerhouse at Dune. Before we start, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice. We're acting independently of our respective professional roles. And with that, Julian, very good to have you here. Today, we are going to talk about PropAMMs on Solana. And I think this is a very exciting topic, as over the last few episodes, we've kind of we've been talking about the giant DeFi hacks and things are not doing well, and kind of everything's moving towards institutions are now the hot game in town, but nobody really knows what that means. And meanwhile, there's actually still DeFi happening. There's evolution happening of on-chain trading execution and on-chain trading environments. And today, really, I think Denning and me are going to learn a lot about PropAMMs from you. And of course, we also have to talk about the project that you are working on, Blink, which came out of stealth yesterday.
Yep.
So congratulations on the launch of that. So maybe just to kick off the conversations, what is Blink? What are you building? And maybe also what's your background? How did you get here?
Yeah. So my background, a few years ago when I graduated college, I was in the HFT industry doing development at a proprietary trading firm. My team was pretty focused on low latency trading, and I was writing C++ code, and I did that for a few years, and then going way back, I first got into crypto in high school. I was on Reddit, read about Bitcoin, had a GPU, started mining, and it was really just a fun side project. I was a kid, and it was a way to start trading, get into kind of internet native. And it's kind of crazy. The first thing I really did outside of mining was there was a group on Reddit that had we did a group buy of a GPU miner. It was all in a spreadsheet. There's some guy I didn't even know him. He just had a reputation of Bitcoin talk, and I think I sent him half a Bitcoin. We all bought a GPU miner. We ended up making money on a dollar basis, and then lost money on a Bitcoin basis. But it's kind of crazy to think how far the industry's come since then, where now we have DAOs, actual structure around these things. But then I kind of for a few years, not much was really happening in the Bitcoin world. I actually missed Ethereum. I got into other things, and then it was really in the middle of DeFi summer that I circled back to crypto. To me, it was cool, the Uniswap paper. That's when Solana was coming out, and it was actually cool to see you could these interesting mechanisms where you could price really any asset, especially ones that didn't have any intrinsic value. And that was something that doesn't really exist, till then. And it kind of hooked my attention. And so I left DRW mostly for reasons unrelated to crypto, but I had a 1-year non-compete, so I had plenty of time to go deep into crypto, and I was kind of getting paid to do it, and I wasn't allowed to work in the trading industry formally. And so that's when I first started doing things on chain. Back then there was a lot of edge if you kind of knew how technology worked and how you were able to dive deep. And I started off on Solana doing these ARB strategies between FTX, these on-chain order books. And I've just been in crypto since then. After FTX blew up, we built an exchange on the Aptos ecosystem called Mirage. And more recently, for the last year or so, we've been building out this project called Blink. And I guess maybe some of the motivations will make more sense as we dive into PropAMMs and maybe some of the microstructure problems on L1s and with on-chain trading. But maybe the short and relevant explanation for Blink for this call is it's really built to solve these microstructure problems in the crypto industry. I think if you look at what is crypto excelling at right now, settlement, clearing, it's pretty obvious to me that crypto is the best system to do this. You can send money, place trades, they settle instantly, they settle globally, you get global distribution. And you look at how this works in the traditional world, it's this kludged together system from the 70s or 80s. And it's kind of been updated as best as possible for the era of the internet, but it's not how you would build it from first principles nowadays. And I think crypto is. I think the problem is, you take these like RWAs, these, US securities, you bring them on chain, and suddenly like execution quality drops off. I don't think it's controversial to say like on chain market structure, crypto market structure, even like crypto exchanges like a Binance are really like lagging behind their peers in the traditional world. And so I think there's not really a compelling case for a lot of participants to like take trillions of dollars, put them on chain, and suddenly it's just so much less efficient to buy and sell these assets. And so Blink is like this kind of next evolution in crypto trading where we're taking like the Nasdaq or like traditional exchange market structure and building like a crypto native platform that replicates that part of it but still has like on-chain settlement, on-chain clearing. And so we're bringing like some of the interesting innovations from the traditional world. So like it'll be co-located, it's going to be like running over equalized fiber. We're leaning on some like infrastructure providers that I think are pretty exciting, allow this to be possible nowadays, like DoubleZero. And ultimately, like the goal for Blink is to have a crypto native place to trade like really any digital asset and get the same execution quality, similar kind of like trading experience APIs as what you get on a Nasdaq. And having worked on those exchanges, I think they are super efficient. And like that is, once we solve this like a trading efficiency problem, I think we'll actually like unlock, like trillions of dollars of assets that are, currently kind of in this like old early electronic trading world.
That's really good definition. Thanks for that. Would you characterize it as in like a DEX, but also with like extra how to say improvement on latency using like double zero tech and like also trying to target at other assets that's not being specialized by other like routing or front end yet? Like, do you categorize it as a DEX platform kind of that way or?
Yeah, I think it's a DEX. Maybe one of like my beliefs that I've come to after seeing like every cycle is I really think the most important properties to come out of crypto aren't necessarily decentralization. This might be kind of a hot take. It's really verifiability and trustlessness. If you can verify every action of a system, that's I think a more important property than being like this is like run by like 1,000 different operators. And so the goal for Blink is to improve on performance, execution, but also do it in a way that you can verify every property of the system. And so every trader is going to get equal access to the exchange. There'll be ways to verify that. Every like tick of the exchange can be fully verifiable. And I think that's separately from execution, still a step upgrade over like a centralized and a lot of these decentralized exchanges where like you're really trading on a sort of black box. And you know our ultimate goal is to really like take this architecture, prove it works offshore, and then bring it onshore and try to compete inside the United States. I think that's also necessary for kind of these like we're trading U.S. assets where price discovery takes place in New York, and we're trading them over in Japan. And really, like these should be traded right next to like where price discovery takes place. This is kind of one of the insights of Hyperliquid, where that they put themselves next to Binance, made it very easy to market make and like bootstrap liquidity. And you look at like U.S. like regulated markets, there's like fair access requirements. Everyone has to be treated equally. Everyone has to have equal access to like placing orders, getting the market data, have the same fee structure. And this isn't really the case for crypto today. And I think that is like kind of a necessary move forward to like make it possible to like have a exchange that's like competitive on even kind of like this regulated side. Like larger market making firms, they want to compete like and they want to win on like the edge they have. They don't want to win on like some uh, black box private deal that's going on.
Yeah.
And so we're like also trying to solve those problems as well. And that's why like verification auditability comes in. Like if you look at even though the traditional regulatory structure in the US, like they have this like statute of limitations look back enforcement mechanism where like they'll comb through your data years later, they'll do an enforcement action. But like crypto actually allows you to do that in real time. And I think that's like the principled way to actually do enforcement, like verify systems are working the way it's described. And you can go to like an institution and be like, our exchange is compliant and we can actually prove it in real time. And I think that's actually like another kind of step upgrade that crypto can bring to the the traditional trading world.
Yeah, I think that all makes a lot of sense. And I mean, I think like saying decentralization is not the goal is, I feel like it's not even a hot take. And like a lot of people agree that it's kind of like it attributes that comes with verifiability and others, but not really like we should just decentralize everything. And I feel like a lot of the points you're making here also ties back to like what people have been seeing as the problems in the prop AMM space. So like I feel like there's tons of like complaints or like not complaint, but like Zero X had this article trying positioning themselves saying that like, hey, right now like proprietary trading shop they have a lot of advantage to price over like retail users and they can spoof you and stuff, which we should all go into in the next a few minutes. But I feel like what you're going towards is that you've discovered these problems and like you're trying to kind of design a mechanism that can lower or how to say like minimize that problems and decentralize access to everybody, something like that. But yeah, with that we should really start introducing PropAMM. But
Before we go into this, is Blink essentially a prop AMM, or are you kind of like, are you competing against the existing prop AMMs on Solana, or are you kind of like building a separate venue to kind of like have all the qualities that you like laid out before?
Yeah, it's a separate execution environment, I guess would be the way to say it. And ultimately, I think where decentralization makes the most sense is really on like settlement. Like I was saying earlier, I think you can't really replicate. You know, if you're the only, if you have like your own platform and you're like doing settlement and it's in a centralized way, you have to trust that platform. If you're on some sort of decentralized layer one, then you get to rely on this, like the economics of this larger ecosystem, the network effects, and you're trusting thousands of people. I think that's a super useful property. And it's like very hard to replicate that, and there's a reason why like we really see a few chains winning there. But when it comes to execution, uh, and the PropAMM discussion will probably like show like some specific issues with that. It's really hard to get the best execution on L1. And if you look at the top perps protocols, they're all on these like custom execution environments. And Blink is going to be like a spot in a perps exchange, and it's going to not look like a prop AMM, I guess. It's going to look more like a traditional exchange. And I think that kind of comes from like my background, my first principles, where it's like, if we could just bring NASDAQ on chain, things would get so much better. And this isn't to say that like prop AMMs don't have a place, but I think that like from first principles, the easiest way to solve the problem is like, let's just try to bring the market structure that already works on chain, that's already super efficient, and then like go from there.
So on the scale, like just to kind of preload this conversation, on the scale from Binance to PropAMM in terms of decentralization, or like I guess PropAMMs are like not that decentralized after all, because it's like one market maker or like one team behind them, like actually giving the quote. On the scale from Binance to whatever Uniswap V3, where it's like this is like purely on-chain execution. Where would you kind of like sort yourself into this? Like then like what I'm hearing is like it's gonna be closer to Binance, but at the same time you're losing. Like I don't know what would your response to this be?
Yeah, I mean, so yeah, I mean, I think you can like on the scale, you could think about us as like maybe something closer to a Binance. Well, I think you look at like Hyperliquid, right? It's like decentralized, but it's like a black box. You can't verify it, and really like everyone's going through the same API that's centralized. And so I think that, and you look at Binance, similarly, it's it's just a black box, and Binance is also making their own markets. Like there's these like inherent conflicts, and you can't verify much on that exchange. I think what you really want is a system that is fully verifiable, fully trustless. So like you don't have to trust us to get your funds off. You don't have to trust us to like make it I guess like rug proof. But on the other hand, what you want to do is make it so you can verify every prop of the system. So like every user is going to get equal latency, and they're going to get market data at the same time. And we have some like cool like design and tricks up our sleeve to make that possible. But I think the goal is that like any trader on the platform can verify like every relevant property on the platform, and also do it in a trustless way. But fundamentally, I mean, it's going to run in a data center in Tokyo. Traders are going to be co-located. It is like a kind of a physically, centralized system, but that is like a design decision to get the best possible performance. So maybe I would say that like I don't want to like, you can draw analogies, but like I think we are like doing something new.
Yeah, Yeah, I'm just trying to like fit this into my mental model. So okay, I think with that maybe we kind of go to prop AMMs, and then we can circle back to what Blink does differently to kind of like yeah,
Good.
understand the full picture.
Yeah, I think like with that, we should lead with the most obvious question is, Julian, you're the expert here. If you may give us like a Eli 5 or like explanation of what really is PropAMM when people talk about it, that would be helpful.
Yeah. So, the way I was kind of thinking about this, maybe it's like not Eli 5, but maybe the best place to start is just to think about like what is market making, like what's a model of what like a market maker is, whether it's an AMM or prop AMM, and then sort of like how do prop AMMs solve this problem better than I would say any existing on-chain system so far. And the way I think about market making is like the most simple model is, you can think about it as like some sort of function. The input is like quantity, the output is like what price is the market maker willing to sell you that quantity at. And like Uniswap was like a simple model, K equals YX, and there's been other models since then. But if you look at that on a chart, it's like some sort of curve. As you increase the quantity, the price decreases. And that works well for assets that don't have like a good mechanism for pricing. You think about like you launching a pump fund token, right? There's no like intrinsic price. It makes sense to just have some model that allows any user to like buy and sell and like create price discovery that way. The problem is that when you look into like how market making works, like in the more like advanced traditional world, there's a lot more inputs than just like what the reserves are. And so if you want to get like a more realistic model of like what is market making, right? Like, your main component is probably going to be something like a theoretical price. So you can think about that as like a Theo, like a Oracle, like a Binance price. And that's going to tell you like what is the true value of the asset. And then there's other parameters as well you want to model, right? So you want to model volatility or risk, like how confident are you in that theoretical price? What's like the risk of adverse selection? So that's going to change how you price that curve. And then, there's probably other things that matter as well. You're a market maker, you have different like reserves and balances and a portfolio you're managing. And realistically, if you're a large market maker, you're not just trading on one venue, you're probably hedged somewhere else. You're trying to like have a delta neutral or like minimize risk strategy. And so you want to model that as well. Because in the perfect world, flow is matched, it's stochastic, and makers match takers, just making money in the spread. But in the real world, flow might be imbalanced. Certain trades might increase your risk, decrease your risk, and you want to model that as well. And so PropAMMs are kind of taking like the AMM model and like allowing market makers to express like any arbitrary function they want. So instead of like K equals YX, they can have like much more complicated functions. And we kind of get into like in my like modeling article, but there's some sort of polynomial logarithmic function. And that just allows you to express like really an arbitrary view on the market, and allows you to be like much more efficient than if you just had like a single static function like based on reserves. And so that's, I think, the main innovation of PropAMMs. There's also like a lot more interesting like microstructure details around them, and like why they make sense on chain, and like maybe why order books and RFQ systems, some of these other alternatives like haven't been as successful. And yeah, we can get into that. But
Yeah.
I guess like the most basic model is it's like an arbitrary pricing function that's like determined by a market maker.
And you mentioned the RFQ. I know that was kind of like a triggering word to Solana people who started PropAMM. I feel like for people like us, like me, who came from DeFi background, like working on a DEX trading platform, I felt like that was the easiest way for me to understand. Basically, this is market maker pricing the quotes behind for users compared to like AMM, which is automatically through like a math function. But it's not exactly RFQ, right? Because it's you maybe it may not even be accurate to call it on-chain RFQ. I don't know how your view
Yeah,
on that is,
I don't
but
think it really is. Yeah, I think they're like pretty different systems. Maybe I think they're trying to solve the same problem, but RFQ is like a request for quote system. They're like pretty popular in
yeah,
traditional finance, where it's certain like large trades or like block trades, like complicated trades. It's easier to just go to market makers and say, what price will you give me? Give them some amount of time to think. They'll come back with a quote. And these are like super popular in certain markets. The reason that like, you know, they were like kind of built out, and especially in the Ethereum world, was first of
the
all,
block time.
the block
I
time
would say
is,
the block time.
right?
It's
Yeah.
pretty high latency, and
I think that's like probably the biggest one. I think there's maybe some cultural reasons as well, where like they're a little bit more okay with off-chain systems, but really the biggest difference is like RFQs are asynchronous, right? So you like are doing something off-chain, market makers will respond off-chain, and then it like eventually will settle on-chain, and that is like an asynchronous process. And so like market makers aren't exposing their quotes. If you were to quote on Ethereum L1, and I have seen like people are trying to do PropAMMs now, so like maybe there's some interesting work to be done there. But
Yeah.
The amount of risk you take increases like as time goes on when you can't update your quote. Prices are going to move more as time increases, and so you don't have to expose yourself on chain. And PropAMMs, like every single slot someone can trade against, or every multiple times in a slot someone can trade against you. And so it's really a harder problem to solve, but on Solana especially, it kind of unlocks some interesting use cases, right? Because you can do atomic arb and go match against these systems. If you try to do like RFQ atomic arb, it's going to be like the opportunity is going to disappear by the time the asynchronous callback completes. And so I mean, it's like one reason they're really successful.
Yeah, some other contexts that I use to fill this like understanding is that like I don't know if you guys remember or like the audience remember, like we were talking about the PBS situation on mainnet Ethereum. There was timing game where block builders also were actually big trading firm that wants to control the last millisecond latency and like adjust their trade and in the block when they're building it. So it kind of all makes sense that like every millisecond the trading firm can grab, they will try to like take control of it, right? So like the async aspect you were talking about is actually one like technical reason why it happened on Solana first, because the shreds that was being streamed when the slot or block bar being built is kind of like enabling the continuous building or block building or Oracle updates for the PropAMM. And I think like you also mentioned, like it's happening now on Base and other ecosystem. I think also only because there was like flash blocks architecture that's happening where now like 1-2 second block can be chopped up into sub blocks where then the latency went down to like 200 milliseconds. So I think another big reason is because Solana has cheap gas to do all these Oracle updates. And I see people are obsessed with the CU compute, like basically optimization and the comparison across different PropAMM as well. Seems like still like a lot of the PropAMM are pretty lazy about it, like not really optimized, but some firm are trying to really optimize gas there too. But
I think one of the reasons PropAMMs like going past like my initial point why they've been so successful is if you think about like who's paying to compute this function, because potentially kind of an expensive function, it's the takers. So you're actually switching these gas costs from makers to takers, and all a PropAMM is doing is updating these parameters in this like function. And so that's insanely cheap, right? You're just writing a bit of state. And then like at some point you deploy a program that's maybe more expensive, but that happens very infrequently. And so you can really like get the compute cost down a lot. And then, Solana scheduler and priority fees are all based on how many compute units you use. So you can get higher priority and some of these updates more often. And so that's like, I think a really big advantage of them. And I think it's like actually a good thing if you look at like the traditional finance, right? Like quote to fill ratios are like, between like 10 and 50, maybe depending on the market. On Solana, there's also like, you can push quotes more, you get like more accurate pricing. And so I think it does make sense to switch the gas cost off the maker to the taker. And and ultimately like makers are like the ones who are like most gas sensitive, not generally the takers.
Yeah. I think there's another interesting thing to note, like was this shift of design on PropAMM compared to RFQ, is that like I think it was kind of counterintuitive for some EVM folks, which they felt like, if you're a PropAMM, you have all the advantage over the user, you're like spoofing user with quotes and stuff. But actually the Solana PropAMM people were kind of like talking about like, no, like because now this system is permissionless and compared to a permission system of RFQ, you actually suffer from a lot of toxic flow because PropAMM now is basically AMM that everybody can access the liquidity for. And like the market maker are updating the quotes as best as they can, but there can still be maybe a counter adversarial competitor or like arbitrage bot who see your quotes. And if you're not good enough, your quotes is stale, your liquidity will be taken kind of like by a toxic flow who have a better markouts than you. So you lose money against them. And there wasn't really good solution for that as well. So that was an interesting factor to note for a lot of people.
Yeah. And the other thing too, and this like Jump brought this up in their article as well, is that you can back engineer these things, verify their quoting behaviors. And that's not really possible in an RFQ system. You get a lot less information. Like you can only check matched trades. And
right.
on like PropAMMs, like every single slot, this is how I do my research. You can simulate what they're pricing across the entire price curve, every single slot, and you can actually verify their behavior. And this kind of goes back to like maybe what I said earlier. Like I think verification is like probably the most important property. It's all on chain, the entire strategy. And so like they do try to obfuscate their code, but ultimately it's like back engineerable, fully verifiable. And like it's definitely a more yeah, like you said, I mean, it allows for anyone to quote, but also you can see exactly like what that quoting strategy looks like. And so I think that's
Yeah.
like the right way to be handling market making on chain.
Yeah. So as we are talking about all these prop payment firms, I'm pulling up like a do dashboard. I think is one of the best sources here to look at the market share and who are the players of the prop payment basically trading firm, and like why are we talking about this topic? I think a lot of the researchers been looking at this topic for the past 2 years, and like because they've been really taking up the market share of across all kinds of liquidity source. So, for example, here's a chart I'm looking at where the volume breakdown across Solana DEX trading volume, and the liquidity provider since the beginning of January 2025 started to be taken by PropAMM over public DEX, meaning like Orca or like Meteora and others. So now it looks like PropAMM volume peaked at around, I would say like looks like 75% around the beginning of this year, 70%, yeah. And now it kind of spiked up slightly, but it's still taking majority amount. And I think that's like why a lot of people and a lot of like even like on EVM Titan as one of the biggest block builder, they're now offering a feature to provide PropAMM feature now. But yeah, and so if I'm looking at this chart, it looks like the biggest player back in the day when it just started leading the trend, it was Albrick, which disappeared, and then Selfie, who at some point had 100% market share, but over time quickly taken over by ZeroFi and Humidify, which now today as still one of the biggest player. And I'm pretty sure it's somewhat like, I don't know if it's somewhat public, but like I think around the MEV circle people, we know that like Humidify basically was coming from like one of the largest MEV trading firm from Ethereum. And I think also the entity behind are linked somehow to the block building layer, Harmonic and Temporal here. So a lot of interesting are going on. And there's another big player, BisonFi, which appeared around the beginning of this year. I don't know how public this is. I thought it. Does everybody know? I don't know.
I think everyone probably knows. Yeah.
Yeah. I think Jump Trading, as one of the biggest trading firm who are always active in DeFi, is somehow behind this entity, or like helping with the pricing or liquidity somehow. Yeah. Pretty much these are the biggest player. There's also Tessera, which come from another active trading firm on EVM ecosystem. But yeah, I guess this chart also shows an interesting perspective by looking at the front end, which is Jupiter and DFlow as two of the biggest front end for retail users, and looking at their volume breakdown. And pretty much majority amount are, this is a breakdown of PropAMM volume. And so, yeah, we can see like BisonFi, Humidify are taking up most of the share. There's this new, I think it's Scorch. Yeah.
Scorch, yeah, I think so.
We didn't know who was behind that, but they're no employer. Yeah. So definitely there's been maybe a war or like a lot of competition going on. And I know like other people are also looking at, for example, like how does their spread compare to like markouts on Binance and stuff. So that's, I know you have a lot of like alpha or digging up there. So yeah, curious, how would you lay out the landscape, or like what are the latest strategies or like things you being identify in this like landscape?
Yeah, I think there's like when I looked in the data, you only get so much information, but I think there's an interesting like breakdown between like Tessera and Bison, who have super large reserves, and are able to quote like super deeply and like a very consistent strategy. If you look at like how they're quoting, it's basically how you'd expect a market maker to behave, and they'll let you trade million dollars of SOL with like pretty minimal slippage. As I think that really kind of implies that they have a large balance sheet. They're able to take on, for them taking on $1 million might only affect their risk marginally, and they also probably have the ability to hedge and like move flows around off chain. And I did do some analysis, like they do actually move the reserves around, probably rebalancing in certain ways off chain. And I think this is different than Humidify, Solfi, Zerify, where I think most of their activity is happening in the PropAMM, and so they have to do they can't take on as much risk, and so like you'll see like their pricing increases like the deeper you're going into their prop, and they have to like try harder to get the order flow right, because a lot of PropAMM volume it's mixed between arbitrageurs and routers, and so you can arbitrageurs are only going to trade against the best price, but routers you can spend a lot of time reverse engineering, figuring out exactly how to like get order flow. And so I think that there's like this interesting dichotomy between these like large market makers. You even saw like Jump in their article talk about how like they thought their PropAMM was like Reg NMS compliant. I don't think necessarily all the other PropAMMs are, and I think that's because they're like really having to compete against these like larger shops that, and especially in the SOL UC market where they're competing against someone that has a huge balance sheet and has access to very cheap liquidity off chain. And so I think the strategies are a lot more about like managing order flow and trying to get the best possible markouts, whereas the other ones are just like quoting off of like a huge inventory. It's like kind of how I break it down. And then there's a few, like Aqua First and these other ones, they specialize in like quoting like meme coins, smaller markets. And I think that's like an interesting area. And one thing I've been thinking about too is like, why hasn't anyone done this for the X stocks, pre stocks? I don't really have a good answer for it, but I would imagine someone should start specializing in those as well, because the competition is like radium, and that should be like doable to outcompete, especially like during market hours when it's like pretty easy to price.
Got it. So it's kind of like a mixture of like big trading firm with big inventory versus also maybe independent searching team or trading.
I think
team.
also the independent teams are also specialized in like block landing. Like I think Humidify, Temporal, they have the best like rate of like landing transactions at the start of slots, and I think part of the specialization comes from being able to land updates very quickly, reliably, and that's I think like another edge that some of these shops have. They're like more Solana native.
Right. So yeah, so like other two thing, which is like landing latency as best as possible. The other thing is like how connected are you behind all the big flow front end? So like Jupiter, DFlow, and Axiom, and others, I guess. Yeah. So I want to get it maybe into a little bit like nitty gritty here. Like, what are some like I guess like unfair advantage or like strategies these PropAMM has been doing, and that's kind of being already revealed, I guess, at this point. I was like already talking about spoofing. Is that the same thing with what you were talking about, quote flashing or like artificial volatility tactics? Are these all the same thing? Is there any other thing that we don't know? Ish.
Yeah, I think that was okay. So maybe for some context, I don't know if I've talked about this on Twitter, but one of the things I found pretty early on was Humidify especially was like crossing their own book. So they operate more than one pool, and sometimes these pools would cross, and that doesn't really make sense. That shouldn't happen.
When you say cross their book, meaning
like you could buy on one pool, sell on the other, and earn a profit, right? So like that doesn't make sense, right? Like just on first principles, they shouldn't be doing that. And so then the question becomes, my thought process goes like, okay, why would you be doing this? Because you're like essentially, if there's a good arbitrager. And I was up to some arbitrage myself on these like PropAMMs, and like why would you do that? And so I think it comes down to the only reason you would do that is because you don't think that is executable, right? Like you don't think a trader can actually take advantage of that, or you're earning enough money that like when they do take advantage of it, you're able to like earn a profit off like the uninformed flow. And so I think so spoofing is kind of a loaded word because in the US it's not legal, and potentially you only place trades you think are executable in like the traditional financial world. Otherwise you're like breaking regulations. But I think there's like a few different ways, so they might have converged on this like if you're a prop AMM, you're like a quant there, and you're like looking at, okay, like let me backtest some data. Like how could I possibly get the most flow and have the best markouts and make the most money? One way to think about it would be like at any given point in time, I have to show the router I have the best possible quote. And then the trade, think about like how a user's flow, right? They first have to generate the quote. They have to like look at all the different PropAMMs. That takes some time on like the front end, router side. Then user has to sign it in their wallet, press accept. If they have that enabled, they might even go in a ledger, and that's like even more time. And so the transaction, and then they have to land it. So like that's going to add a few seconds of latency for like a retail user, maybe not for an arbitrager. And if you can, make the router think you have the best quote, and then a few seconds later that trade hits your PropAMM, and as long as you're within their slippage, which is typically like kind of high, you can get that better markout and get the volume. And so that I think was the strategy that was like pretty popular a few months ago. You could think about that as like increasing volatility on your PropAMMs, and then as long as the volatility has like a period that's like the right amount of time that the transactions still land while the volatility goes up and then it goes down, you can basically like increase your markouts and also increase your flow. I think that like was kind of a requirement for some of these firms because they're competing against like DoubleZero and Python 5 that can be super efficient. And then of course the problem becomes, well, like if I do this on just a single pool, then I'm losing flow like whenever my volatility or like whenever I'm like lower than like the theoretical price because someone else is gonna be quoting better. And so you also look at these PropAMMs, a lot of them operate more than one pool. And so like the benign explanation would be, okay, they just want to A/B test. I think that's like super reasonable. You'll change some parameters, see if you like increase your flow and your markouts. That's not exactly what some are doing. I think you take that strategy like this logical next step. It's like, okay, well, what if I have more than one pool? At a given point, one of them has the best quote, one of them has a slightly worse quote, and you kind of like get the periods all lined up so that at any given point you're like always presenting the best quote, but then it's not really executable later on. And so this was like I think there's a few PropAMMs like doing the strategy, and yeah, it's like a problem. And like if you're a router, it's difficult to handle. And this is like where just-in-time routing like really became important because you would really like to be able to say, okay, well, like let me pick more than one PropAMM and then just like pick the best one when my transaction lands. And in a lot of ways, like kind of solves the problem, especially if you can have like a large enough set of PropAMMs in that transaction. But I think this kind of goes to like maybe the problem, and this is like not in TradFi, it's not like market makers don't try to reverse engineer systems. Like the PropAMMs have all the incentive and all the time in the world to go figure out exactly how these routers work. How can I maximize the flow? And then, the way you make the most money is you present the best possible price and then try to give them the worst possible execution. And this is like basically bad for users. And maybe like taking a step back, there are some other like benign explanations you could think about that still impact users, but maybe make more sense. So like, if you're a PropAMM, you can count the number of trades, you can count the number of slots, like since you updated. And let's say you present a price that's like really good to the market. An arbitrager is going to land there first, and maybe more than one arbitrager, and they'll like try to bring that price back to some fairer value. You could like you could actually use arbitragers as a measure to be like, if my price is too good, like really shoot that price back down. And that would do the same thing. It would look the same from like a data analysis point of view. You would just be like, a few small trades from arbitragers, and then like sort of like what I was doing, and then retail users who saw that quote will like get a worse price. And so I think you could have converged on the strategy from like that point of view as well. Like, okay, every time I see toxic flow, I'm going to like decrease my quote by a large amount, and that would still impact retail users because arbitragers are going to land first. And so spoofing is a little bit loaded. Like they might not have had this intention. This was like the end result. And I like did this article and this analysis where if you looked at certain PropAMMs, like is the moment where the trade hits the PropAMM like the optimal time to do it, or if you landed earlier or later, was that the best possible time? So like you would assume if the PropAMM's like benign, you should get the best possible price when your transaction lands, and you get worse prices if you just like put that at a random moment in time. And some PropAMMs that is true, some PropAMMs that's not true. Like the worst possible time to land on some PropAMMs is actually the moment when it lands, and some PropAMMs the best possible moment. Yeah, like it just depends on the PropAMM. It's sort of like a measure of toxicity that I think kind of shows.
Is this a reverse engineering article?
No, it was a later Twitter thread.
Just because we're data nerds here, so you're calculating this based on the price that people actually got on chain versus the Oracle rate at the time that you were like, how are you getting the?
What I was doing was like you could take a trade and like put it at a random timestamp. Like, what if I put this trade not at like the exact mode of execution? If you scroll down a bit, there's like some good charts here. If you go all the way down, there's like a unified one with all the PropAMMs.
Oh, nice.
Yeah.
This
like,
big one.
Yeah.
Let's see.
Well, the one above it, I think, is a little bit better.
Okay.
Yeah, so you can see here, like the dotted line is like sort of like a random like null match, and then the the higher the price, like the worse execution you get. And you can see here, like on GoonFi, like basically the worst time to execute is the time when trades actually execute. If you just hit GoonFi at a random time, you get much closer to like the Binance price or like the random price. And look at BisonFi, the best time to execute is when the trade actually executes. You can see like there's a dip there, and you can also see that like, yeah. And so I think this is like sort of a measure of, if routers were optimized, they would only send you the PropAMM at the best possible time when it's offering the best price. And you see this on like, you see this also on the AMMs, like on Meteora and Radium, right? Like they're sending you there when, somebody moved the price off or like the market moved.
Right.
And then like, SolFi, again, the worst possible time is like when trades actually execute. And ZeroFi is like pretty good as well. They're pretty flat.
Yeah, it seems like the natural outcome should have been like you should trade at the best time.
Yeah.
But yeah, so SolFi and GoonFi here looks like they have some artificial tweak here. So
yeah, and then Humidify like is actually pretty flat. And if you there's a chart below it where this is like the median execution price. If you look at like the tail cases, I think Humidify is doing some interesting stuff on the tails, like for very large trades or like certain types of trades. But in general, Humidify is, comes out, and this analysis is like pretty fair.
Gotcha. And I know that you also had like bigger overall like study on reverse engineering all their pricing curve. I know like the first person who was talking about this was like a data team called Ghostlog. They had a talk at Breakpoint. They were trying to do some preliminary work here, but I think you went deeper on that. Something I remembered from that talk was that, like, for example, because PropAMM wants to fight against the toxic flow, if you're a known front end like Jupiter, they might give you a good quote. Or a worse quote, they might give you a good quote, and then if it's a toxic flow or like an unknown arbitrage bot, they might just give like a 2 bips or 10 bips worse price or something like. Is that something similar you found, or is there any other insights you want to highlight?
Yeah, I actually, I was doing some arbitrage. I got pretty deep into that sort of analysis. It's interesting that it seems like that behavior's kind of dropped off, and I was also a little bit skeptical on like first principles about whether this makes sense, because if you're an arbitrager, you can just, construct a transaction from any front end you want. Like I was like, you can make an OKX or a DFlow or a Jupe transaction.
Like you can use their smart contract and pretend you're a trade from them.
You can fill in the details yourself and like pretend you're a different router. I was doing that for a while. I think either arbitragers got aware of this, or
this is a cat and mouse game. Everybody's trying to
And the other thing they do that's like a little bit deeper is, in Solana you can introspect the transaction. You can see what like the inputs to the transaction are, like what accounts are there. You can even read like what the Jupiter transaction is doing, and then you can say something like, if I'm part of an arbitrage transaction, I want you to give them a worse price. And I think that I'm also a little skeptical of that. I do think that definitely is going on, but one of the problems in Solana specifically is that you can also bundle transactions. So you can go through like a block builder, and you can say, I want you to take these transactions, execute them in order, then you introspect any specific piece of it. You don't see the other pieces, and like do an arbitrage as like a 2 or like 4-step bundle. And I think this like actually it does defeat this like transaction introspection thing they're doing. And so like Humidify in the last few months is like blocked bundles. I think that's part of it, is because it's hard for them to like see the entire transaction, the flow. And unless you're like a validator, like doing MEV, it's like not possible to do that bundling strategy anymore.
Got it.
But yeah, I think they've gotten a little bit more sophisticated than just like picking specific routers now. And also, I'm not completely convinced that's where like a ton of the edge comes from. I think it's to some extent like marketing. But yeah, so like I guess I can kind of like talk about this article. Like it's sort of like I was talking about at the beginning about like modeling PropAMMs. Like I kind of started in this article is like from first principles, how should a PropAMM look? It should be some sort of mathematical function. We should be able to model it. And if you know what the function was, there's like some libraries, Python libraries where you can like run optimizers and figure out the exact set of parameters that fits the curve as best as possible. And so I basically went and like found a set of functions that to me made sense of like if I was, it's gonna be some polynomial, some logarithm, some sub-exponential function that like models how I think the pricing curve should look. And so, yeah, I mean, these are the candidate functions, some linear, quadratic, cubic, square root, log. Just off the top of my head, those made sense. And then it's a matter of picking the one that the PropAMM uses, and then like doing some sort of Python optimizer to find the parameters and like see how well it fits. And one result I found that I was actually surprised is like I didn't think to do this, but obviously all the PropAMMs are like ahead of me and thought about this is like they don't use a single function. I sort of assumed there's just gonna be one function that models the entire market. They actually use like a set of functions, but and depending on what quantity it's matching against, they'll like for the first 100 sold use one function, 100, 200 different function, and like the sum of these all gives you the price you execute at, and that's like actually how PropAMMs work. So that's like pretty interesting.
I don't know for sure, but it kind of makes sense in the perspective that like if it's different sides of the trade, they might need to hedge differently in elsewhere, and so it
makes sense. And also think about the router stuff, right? So certain users are trading very small quantities; they might be way less likely to be toxic. Certain traders are trading huge quantities; they might be like informed traders. They might be trying to like wreck you in some way, and so it makes sense to like have a specific function at the top of the curve, capture like the small router flow, different function larger in the curve, capture larger traders, and like trying to model that. Or another way to think about it would be like think about an order book, right? You have like different levels on an order book. You may be trying to model like sort of an order book liquidity on a mathematical function. And so maybe depending on your depth in the book, you have like a different perspective on what the market looks like. But yeah, these are all the pricing functions, and then you can see like the curve that I modeled that matches against it. And it's pretty interesting. They use like a mix of like 5-6 different functions. And so there's like
this would be the chart, right? Or like
this is the chart of like the parameter, the coefficients of the functions.
Okay.
Like one of these would be the Oracle price. One of these would be like some sort of volatility metric. It's not entirely clear what they all represent. But you can see here, this is like the error, like how close I got, and pretty close to like how the PropAMM actually operates. But there's like it didn't get 100%, and that's like a time problem. And I don't know if I wrote analysis of this, but I also went deeper, and this is just a single slot, and I did it over many slots, and the models like did get worse. There's some other interesting components they use, right? Because if you're a PropAMM, leaving a quote on the market is risky, right? Like you maybe can't land for a slot. Like maybe the validator is toxic, maybe the validator is down, you can't land for a slot, and so that increases your risk, right? Because you're like less confident in like what the last Oracle update was. And so they can use things like what slot they are, like what the clock time is, and change their price model based on that. So like a pure mathematical function isn't, you need to add more components than just the math. And it's like also one of the interesting things that like why that makes sense on chain is that like if you're quoting an order book, you can't just pull your quotes because you missed a slot and you didn't update it. And PropAMMs give you that flexibility. You can introspect the chain state and also the user state, and just make it kind of match like the risk and the microstructure of on-chain.
Yeah, why you are measuring all this? I guess like from these pricing modeling, and I wonder the next question is like, do you know how much money they're making? I haven't seen that kind of data. I feel like the standard method of doing that would be estimating the markouts on Binance. And I remember like Benedict Brady, he used to have some like screenshots on Twitter about it, and I did some similar study on the SexX trader on EVM, and I'm aware that like using the Binance markout to estimate is the total upper bound estimate because you're not considering how they hedge and their cost and all that. So
if you pulled that tweet before, or the tweet with the last tweet we had pulled up, I had like a market analysis based on Binance at the top of that. And I basically agree with you. I don't think it's a realistic. It's something to lose money. If you just look at the Binance markout, if you go all the way to the top there. Yeah. So this is like how much money they make first Binance, and you can
Mhm.
see like um, who is it? Yeah. Um, some of these appear to be losing money, right? If you look at the instantaneous mark out, and obviously, none of them would be quoting for losing money. And so I think it's just not the best analysis, right? They might be hedged. They also,
Mhm.
Humidify, I know, talks about like they, you go on the website, they might lose in like instantaneous markouts, but they, claim they make money in like longer term markouts. And so I'm not,
I see.
I think just looking at, what was the price versus Binance is probably not the most accurate way to look at
Got it.
it. And yeah, yeah.
Right,
So
because you don't know exactly the timing they're selling, and they might be selling at a
I mean,
like
selling
two
like
millisecond.
hedged, they might be like winning on like 5 second, 30-second markouts and losing on the 1 second markout. And I guess also like one limitation of my data is I only have access to 100 millisecond Binance feed, and I'm also like consuming like gRPC, so like the time slots don't match up perfectly. If a price moved in a few milliseconds, like that's not going to appear on this, and so there's like some limitations to my data, and like I don't pay for like the Binance real time data, so yeah.
I see. I see. Yeah, I think yeah that will remain a question. I feel like everybody is guessing each other's numbers name, but I feel like the other side of the whole prop payment debate is basically like what should DEX aggregator or front end do about it, right? Like so we're talking about all these strategies and how they're pricing at what prime time, but aggregators they're basically the one that's like facilitating all these dumb retail order flow towards them. And we've seen different front end made their choice. And doing nothing is also a choice. I'm not aware of what Jupiter Aggregator has publicly stated about, but I feel like as one of the largest to flow and a lot of PropAMM are going after them. I don't know exactly. They aren't really aggressive about like stopping PropAMM and doing that. And I know that ZeroX was standing really firm, being like, we will ban all the PropAMM that's being spoofing against our users. But that is that a sustainable strategy? I'm not sure because on the flip side of the question, like what I hear about like how SoFi went from the biggest PropAMM to much less volume now is because they were trying to basically like whitelist and banning like toxic flow, and over time you ban more like volume, you just go down. So yeah, and along all that topic, I know that you also like try to measure like the execution quality right now that's provided by aggregators, and I'm curious your perspective on like what the aggregators can or should do, and what's the latest like download on that front. I'll pull
Yeah,
up also that tweet.
I think that like the most straightforward solution is just-in-time routing, right? Instead of asynchronously like generating the best update and then at runtime executing against what you thought a few seconds ago was the best, prop AMM. What you really want to do is have like a set of prop AMMs, maybe like even 2 or 5, and um, and then at runtime you pick the best one. And so if somebody is spoofing, they're just not going to get the flow when the transaction lands. And so I think that's like the sustainable solution. There's also like interesting enough, like these prop MMs always like to talk about toxic flow, but in some ways arbitrageurs and like toxic flow keep them honest, right? Because if you're humidify, you're crushing your own book, that opens an opportunity for arbitrageurs to come in and take money off your exchange. And the same is true of SoFi and them. And so I think I was doing some arbitrage, mostly as like an experiment, but it was a proper strategy, especially when these prop MMs were like being more toxic. And I think that it's easy to like be like, oh, arbitrage is the reason why takers can't make don't get as good markouts as they should. But on the other hand, they do keep these like prop MMs honest, and so I'm a little bit skeptical of like for prop MMs like, oh, I'm banning any toxic flow. Like realistically, you're Tessera, you're Bison5, you're like the most informed market participant. You should be able to handle this toxic flow and still make money. And yeah, so I think that's like those are the two sides of the coin: is arbitrage to keep them honest, and the aggregators just need to be more intelligent about like just-in-time routing. And Jupiter and Titan both have a product, and I've been a little bit busy with like my real job, so I haven't had time to like run through the analysis. But I'm pretty confident like just-in-time routing like will improve execution quality.
Would you tell us what just-in-time routing is in terms of a
Yeah,
definition?
yeah. So it's actually like quite difficult to implement, right? Because what you're doing is you're taking this logic that ran off chain on like a server somewhere, and you're trying to do it on chain efficiently and gas efficiently. But what it is instead of making a single routing decision off chain and then executing on chain, you make that routing decision on chain, and so you can do things like which of the PropAMMs when this transaction is actually being executed at the best price. You can even be more sophisticated and be like, oh, if it's a large order, like let me split it up between multiple PropAMMs so I can get better prices. That's like actually a really hard problem. Doing like sort of like convex optimization is already difficult enough on Uniswap, and now you're talking about, okay, these are custom pricing functions that aren't as simple as Uniswap, and now I want to split up flow between them. And so that's really where I'd like to like look into like exactly how they do this, because it sounds like a really hard problem, but it's fundamentally like, Solana is a computer. Anything you can compute off chain, you can compute on chain. It's just a matter of making it efficient. And so ultimately, making the decision at the moment the trade executes is the right way to do it. And interestingly enough, like even off chain, Jump Park, we kind of talked about this, like Reg NMS makes you route to the order that has the best price. This causes all sorts of problems. And it's like actually like an edge certain market makers have, is like understanding how the system works. And because every exchange is like physically located in a different geography, like separated by some number of microseconds or milliseconds, users in the traditional markets don't actually get the best price either. And because on-chain is an atomic state machine, this is really the argument Jump was making. We can make these routing decisions atomically at runtime, send you to the best venue, and that is actually like a kind of interesting change in market structure, like microstructure versus like traditional markets. And I think just-in-time routing is like the right solution to this problem.
Yeah, and also like circle back on what you were saying in the beginning about Blink. When you say verifiable, I'm assuming, but I'm like, is this to verify the quotes? And like, does that sounds like a complementary, or is like a different approach against like towards compared to JIT routing?
Yeah, so it's a different approach. We have our own execution environment, and really, it's sort of, on an order book, which is like our like data structure for like where people quote. Routing decisions are really easy, right? You start at the best bidder offer. You just iterate, trade by trade, and so like as a router, you're always getting the best quote. The reason this is like difficult on chain is because it's like actually expensive to update an order book if you're paying gas every time, and so like it's you don't pay gas on our exchange, and so it's much easier to like represent these pricing curves on an order book, and then routing decisions are like kind of out of the box, always super efficient. And so the complexity now goes back to the makers and away from the takers. Really, I think when I say verifiable, one thing we're trying to do is like verify access to the exchange, and so like everyone is going to be equalized. Like everyone has 1 kilometer fiber, the same distance from the matching engine, and there'll be like audits for that part of it. And also the sequencing, this is probably the biggest problem like this like off-chain sequencing space is that how do you verify the behavior of a sequencer, and how do you make it so that let's say I'm operating like a hyperliquid or lighter style LP vault, like I'm trading on my own book. So maybe if I also operate the sequencer, I can see trades before they land. I can sequence trades in different orders. And I'm definitely not saying this is happening, but you can see the problem of like an unverifiable system where like fundamentally the sequencer is making decisions about who lands first. And so like any MEV you can do on chain, you can also do on a sequencer. And so we're working with DoubleZero to like do the sequencing at line rate in like the networking system and like rebroadcast that to everybody, so you can verify the exchange is matching trades in the order they actually came in. And as operators of also an LP vault, like we'll have the same latency as everyone else. And so I think that's a missing piece. And also like compared to Binance, there's a bunch of exchange operations that all happen. Like you're updating Oracle prices, mark prices, trades, land, fill, match. Like you want to make sure these all happen in the correct order, and you want that to all be verifiable, and also just like solvency balances. Like I was around the FTX era, right? Like no one knew the balances on FTX, right? So it's almost like the most basic problem of like you want to build an exchange where you can verify all of that, and every single tick, the exchange is going to be solvent, and you can like prove that. And so that's where verifiability comes in. What's interesting is that PropAMMs let you verify the actual market making strategies, and you can look at this as good or bad, right? Because market makers are giving up. Like if you want to, launch on PropAMM, just go copy an existing one and change some parameters around. And so market makers, potentially you can verify like their activity. It's non-toxic. Like what is their strategy? On the other hand, if you're a market maker, do you want to reveal your entire market making strategy on chain? And so I think there's like some trade-off there. And on an order book, right, you're not verifying the strategy that's happening off chain. And so that's an interesting difference.
Yeah. And on top of that, I feel like I wonder if you see PropAMM's role is connected to the broader MEV ecosystem on Solana. So like we know like there were vertical integration on the Ethereum stack where like some trading shop are sending to their own block builder and like they might have some exclusive order flow deal, but like I don't know how like the whole I know I hear Solana people talk about scheduler war and all that like timing gain, late packing tactics are these somehow intertwined with all the PropAMM players as your view? And like, I know you also had some public tweets about like the future of PropAMM discussion with MCP, multi concurrent proposal coming to Solana stack. So just generally curious how you see that role plays into the MEV ecosystem there.
Yeah, so I mean, one of the for sure biggest problems with like on-chain market making is that basically the validators are trading against you. Like that's what MEV is, and that's like very different than like a traditional market where you have like an impartial order book that's treating everyone fairly. And so I think PropAMMs are basically like trying to be a solution to this, and it essentially works, right? So like I said, one thing you might be worried about is if my quote is stale, someone's going to arb against it. And you can do something like, well, if this validator is not scheduling my Oracle update at the start of that slot, I'm just going to widen my spreads. And so I think that's an interesting reason you can mitigate them. And also, I think Solana in general has a much less MEV than Ethereum. Like most validators are pretty honest. They have a pretty honest scheduler. Not everyone does, but there's that. And also,
I heard there were really toxic situation going on in the past, at least. Like there were like
validator. Jito has a website with the most
right.
toxic. There's a handful that do a lot of MEV. But what's interesting, and this is something I should look into, is that you can see the leader schedule. If you're a PropAMM, you can say, oh well, like if this is a really toxic validator, I'm not going to quote this slot. And so you can get a lot of information out of a PropAMM you can't get on like an order book where you can't like write an arbitrary program. And so I like they're basically like an interesting mitigation. And then also you can they like maintain state over time too. So like you can see what's happening and try to mitigate it. I think longer term, I think PropAMMs like still work on MCP. I don't think it's it'll necessarily make PropAMMs like unfeasible. What I do think would become a huge issue is that if I think MCP really needs to come along with application specific sequencing, because if I'm a PropAMM, I really want to have my Oracle updates first before any traders hit me. And that's it's easier to do that today because of the last PropAMMs are really good about like managing the scheduler. They're like familiar with the entire like ecosystem. With MCP, the sequencing is like taken out of your hands. It's done by like the algorithm, and you really don't want to make it so that somebody can like start front running these Oracle updates. You really want to have it like what would really make PropAMM market structure really good is if that they could say I'm always sequencing the Oracle updates first in the block, and then everyone else gets to like land after them. And I think that will be useful. Otherwise, the problem is going to be they're going to have to spend even more money because arbitragers it's going to be much easier for them to land before the Oracle update. And I think MCP plus ACE is going to be like would actually be like probably good, and also probably make it fairer too, because right now there's definitely an edge. It's like who's better at scheduling, who's better at landing, and it would kind of take that away since there's like end proposers, so there's like less competition over inclusion, and it's certainly less over ordering.
If I repeat back from what I've understood from this conversation, is like Solana PropAMMs are at the current moment in time the most efficient on-chain trading venues. So efficient that Jump even claims like, hey, if you like trade Sol USDC in some cases, or like in whatever 95% of the cases, this is actually like equal to like if you were to trade this on Binance. So now you're building an exchange that is basically trying to be like, we're going to be the neutral kind of like venue for bringing the NASDAQ on chain, as the Solana people always like to say, of course, what that actually means in practice. But are you going to be utilizing mostly the Solana tech tree, or are you kind of building your own kind of like sovereign tech tree? I like from this conversation, it's still not entirely clear to me how kind of like what are like the layers of tech that you are like plugging into each other. So you're building this kind of like very like I guess what you're trying to do is really kind of like build the most like build a really good trading venue that's like verifiably neutral or like fair to all participants. I think that's like, if I would try to summarize what I've learned here, that seems to be the goal. But like, what are the what's the tech that's powering this?
The other goal is just to increase performance. Like we're trying to get latency, 10, 100x faster than you get on Binance or Hyperliquid. And I think, NASDAQ's operating at like 20 microsecond or so, round trip latency. We're trying to get, inclusion close to that. We're trying to get execution like 200, sub 200 microseconds. And that's, 10, 100x over Binance, Hyperliquid. And our tech tree is basically every exchange for the most part is cloud hosted nowadays. Binance, Hyperliquid, they're in AWS for, and there's like overhead in the cloud. Nasdaq has a custom, their own colo, their own networking gear, optimized for trading, and so that's where you get like the easy, 10x improvement. Is like, let's take crypto out of the cloud. I think it's time to kind of like grow up and adopt maybe these like harder things that the traditional world is doing. But on the other hand, it's getting easier, right? Like DoubleZero has a private fiber network. They have a multicast rebroadcast network, and that is getting easier to build. And that's, I think, one reason why this is like the right time to do it. I think there's like maybe like two things I would say about PropAMMs. One is that right now they're like only spot for the most part. Like perps is a whole different problem. Perps fundamentally aren't fungible, right? So you can't have a PropAMM. Like it's not as easy to, and it hasn't been done so far, as like making PropAMMs I can quote on perps exchanges, and that becomes a little bit weird because you want liquidity easily available, so you can do like liquidations, backstops, and ADLing. And so, we're building a spot on perps exchange. PropAMMs are like still only in the spot world, and that will probably be the case maybe forever. The other thing I would say is I think PropAMMs are this like really interesting solution to like what on-chain microstructure, all the problems with it, and this is like the best solution for sure to date, and it's actually quite competitive. That said, I don't think Binance is even the best venue. I think you look at their fees. Like this is a huge reason why it's competitive to trade on chain. Like Binance is taking insane fees if you're a market taker, and I think that is like just a function of them being like the market leader, and they can for sure be undercut. And these like every crypto exchange is centralized. Like their pricing is much worse than you get on a traditional exchange. And then I would say like our biggest goal is to really like drive price discovery. PropAMMs are basically, for the most part, driven off these external price oracles. So like price discovery takes place on Binance, then on chain we go and we like create a model of what the market looks like. We really want to be like the venue for price discovery. To make that happen, you really want a continuous order book. You want to be able to like push prices every single tick of the exchange and allow market makers to like respond very quickly to any changes in your market. And then I would hope that like we become the venue for price discovery. Like we can actually make PropAMMs more efficient because they can get price updates faster, markets get tighter, and I don't think it's like an either or situation. I just don't think that on chain is the right place for the most part to do price discovery. And I think you kind of touched on the MCP problem. MCP and Solana in some ways makes price discovery harder because you're basically delaying. If you want to see what the on-chain price is, you have to aggregate from every single leader what transactions they're including, and then like how they execute. And that's, the world's 100 milliseconds, 130 milliseconds to get across the world over fiber. And so it's going to slow down price discovery, but it does make the system much more censorship resistant. It has like advantages, but ultimately I think that price discovery needs to take across our chain, and we also just need to have more efficient management for price discovery. And that's really what Blink is solving. I think PropAMMs continue to grow. I think Blink will grow, and I don't think they're like mutually exclusive.
Okay, very. I think it clicked in my brain now. I think I see what you're doing. But essentially, so Solana is kind of your on and off ramp into the exchange, I would assume. And then kind of like everything in the exchange just sits in, I don't know, a custodial wallet or smart contract, however you've configured that. But then all the trading execution of that stuff happens on the server that is in Tokyo, and you are giving everyone equal access by utilizing the DoubleZero private whatever internet network or like their private fiber
Yeah.
Okay, I see. So you're
And then,
like so a lot of this will be kind of like utilizing the DoubleZero tech to like make sure that the latency is like as low as it can be.
Yeah, and then that's really what this step improvement comes from. I think is instead of using AWS, which is maybe like the easy way to do it, let's build it on like a private fiber network that's like actually built for it's like built for trading, built for moving information around the world, and then we're still leaning on Solana for verification, for settlement, potential for data availability. Like that's really where like you without an L1 to actually verify behavior, it's still kind of like a trust me situation. And so even the MCP, I think it's like actually kind of like a level up for us, because it's now like even more censorship resistant, even more like those properties improve under MCP for sure.
Okay, very cool. The tech tree and the technological advancement of Solana trade, like I don't come from this world. Very cool advancement in the tech tree of Solana to kind of like be like, okay, we've kind of like maxed out the execution environment on chain, and now what happens if we like kind of like do this hybrid version of like we have one whatever. You've put this nicely before, so I won't try to I won't try to summarize something here. But this has been very, very interesting discussion. I was just part of the furniture today, but I learned a lot. Thank you both for having this very interesting discussion. I think this was a super interesting introduction, or kind of like also in some parts a deep dive into the current PropAMM marketplace. And yeah, much success with your. Like I wish you the best. I don't know how to put this. My English is, but this seems like a very.
You carried it out in a German way, like with a skeptical, but
yeah.
I'm joking.
I mean, come on, this is what we do. No, super exciting. All the best with the project. It's probably I don't. Yeah, now I have like a whole stack of new questions, but we've run out of time, so we'll get you.
We can come back and talk just about Blink.
Exactly. Well, once you've like hopefully found some traction, some market, I don't know, success.
We can look at the new dashboards
in 6 months, a year, or something like this. We can get you back on. But yeah, thank you everyone for listening. Is there any last words you want to leave us with, Julian?
No, I think we pretty much covered it all. I just appreciate you guys having me on. I had a really good time, and it's cool to talk about things and not just nerd snipe on Twitter. So it was great.
Yeah. Thank you so much for coming on. You have listened to the Index podcast. Thank you so much for listening, and we'll see you in 2 weeks. Bye-bye.
Crypto day wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade. Uncovering public secrets in the blockchain shade. Bad chiller, cherry picking liar. We call them out and set chart crime on fire. Index podcast, crypto data empire.